Happy Friday and welcome back to the Prepared Mind channel for our daily opinion editorial videos. Now, I want to thank everyone on Patreon. You know, you guys, I think I'm giving you the best I can. For $2 a month, I want to get you guys all kinds of information. I want you to see the things I'm seeing and understand where we're at. And I could go out and get a job, my 9-to-5er type job, and get a bunch of those things put together, but I would rather be here doing this. So without you guys on Patreon, without the little bit of money I get from YouTube for commercialization, monetization, all those little dimes and nickels that you guys toss my way, it really helps out, because I would rather do this than go out and do a 9-to-5 and spend 40 hours a week doing menial shit. You know, I'll take my little construction jobs here and there if I can get them, but I love doing this. And man, have I got so many news stories. It's coming at us so hard, so fast right now that I can't keep up hardly. Like this video is going to be centered around 4 news articles, 4 different news concepts, and I'm going to synthesize them, bring them together, so that we can discuss them, we can think about them in a different kind of way. So, once again, thank you guys very much. And if you're not on Patreon, get to Patreon. Sign up. $2 measly a month helps me do this. Now, I'm going to start with article, Global Carmageddon Continues. Ford set to slash 12,000 jobs across Europe. Now, you may or may not know about Ford doing that. Ford is slashing 12,000 jobs. Well, if Ford Motor Company is doing so well, why are they doing this? Well, a lot of people say they're just consolidating, they're bringing things together, they're making themselves more profitable, right? Ford doesn't want people to see big losses and sell their stock, which would cause Ford stock to collapse. So they're doing this to protect their little asses at Ford and to protect their stock value. So they're hurting people, literally hurting people by firing them. When you fire someone, they get hurt. Now, it's not because these people aren't doing a good job assembling cars. It's because the stock market, not the stock market, the world economy is hurt so bad. But in order to keep the stock market values up, they have to hurt regular people by cutting them, right? Global Carmageddon continues, right? This is on the heels of other bad news with Ford and automakers. Of course, we all know about the bad news with GM closing plants, which closes other suppliers, which hurts towns and families. Also, Tesla. I think Elon Musk is doing worse with Tesla Auto than he is with SpaceX, which is, privatized space transport. I guess I had to look into forming a rocket corporation. I didn't know there was a lot of money in shooting stuff into space. I'm making a joke. I know there's lots of money there. Anyway, so what is Ford doing? So we go to the next article. Trade war nightmare shocks firms. 2/3 think recession nearing, survey warns. Now, they're blaming this on the trade war. Because of the trade war, 2/3 of corporations that were surveyed think a recession is nearing. 66% of the corporations surveyed see shit hitting the fan economically. Where I think they're absolutely wrong is blaming this on trade wars. Right? The trade wars didn't happen or even start with China. And GM saw such bad business all in 2018 that they started closing their plants. Remember, they closed 6 manufacturing plants, auto assembly plants. They closed 6 of them before the trade war started. Don't tell me that corporations are doing what they're doing because of the trade war. It was already slowing down. The trade war was started in response to the economy slowing down in 2018. Now, as we've said, the stock market is now considered the economy. But that's just a private casino where they bet on how good things are. That's all that is. And the more people that gamble, the better the economy looks. It's actually quite the opposite, right? So here we are, 2/3 think recession is coming, right? So what does that mean? Right? What does that mean? Take a look at the article, read it. Corporations see the economy coming down and they're starting to make cuts. They're cutting, as we just saw with Ford, they're cutting people. Not because of the trade war, but because of the slowdown that's coming. Now, what is fascinating in this article you'll find is that certain corporations are doing this and other corporations aren't. Surprisingly, I was surprised to learn that the larger corporations are shutting doors. They're laying people off. They're making cuts. They're narrowing product lines. They're stopping R&D. Whatever it is they're doing to save money because they see the slowdown coming. Smaller corporations aren't. Okay, so corporations, or firms as the story refers to them, they're not firms, they're corporations. If they make less than $500 million a year, right, in annual revenue, if they make less than that, they're less apt to see what's coming and make changes. So it's these mega corporations that are making more than $500 million in revenue, right? And I know that's not mega corp, but anything bigger than that, they're seeing it. They're understanding it. Now here's a quote down here. The pain of 2008 and the Great Recession is still pretty vivid in most business owners and management teams, and they learned a great deal from that experience. Preparation for an eventual slowdown, they know how to do it effectively, and they're taking steps so they don't get caught off guard. See, back in 2008, people were caught off guard. They didn't see this coming. Now, it's only, 11 years ago, this happened. A lot of corporations still have that same management team in there that saw what happened, saw the signs, and then took action to cut. When I was hired shortly before the 2008 thing, we ended up doing lots of cuts. Never laid off one person, by the way. I never laid off one person. No one in that company got laid off. We made the cuts, trimmed the fat initially, did everything that was needed. Just so you know. We learned how to do that. These companies, the same thing. Only they will slash labor. They will slash everything they can. And they see it coming. They're understanding it. Right? It wasn't long lost. It wasn't 1987 or 1971 or 1929, right? This is fresh in their minds. They may be stupid on Wall Street with their investments, but what is happening in their building, they're seeing now. They're seeing the signs. So, yeah, two-thirds of corporations are taking preemptive, how should we say this? The government announces the recession is here only after it's been happening for at least 6 months. And by then it's too late. You've been bleeding money and staff and everything's slowed down, right? They're doing it ahead of time. They're preemptively cutting because they see it coming. So now I'm going to move on to another story. Goldman warns risk of market crash is highest since the financial crisis, meaning, of course, 2008, nearing 60%. Okay. A common refrain among the bullish talking heads on CNBC in recent months has been whether one includes the Fed's invisible hand in price discovery or excludes it, as so many naively continue to do. The result would be the same as stock fundamentals are still very strong. But is that really the case, or are they just talking their book? Okay. So this particular news story is pointing to some more of the mentality within the system. Now, if you recall back last year, end of 2018, the market collapsed. As far as I'm concerned, it absolutely collapsed. It was once again saved with pumped up cash. If you recall, Mnuchin and the admission of the plunge protection team and then the salvation of everything, right? They slapped a big old Band-Aid on a hole in the balloon and held off for now. And it's just held off for now. So the question is asked, why is the market ignoring this risk of growing corporate imbalances and buying stocks at any opportunity? Because, as Goldman concedes, after a small drawdown in May, central banks have helped buffer volatility in June, the month we've just gone through. Even so, the strategist warns that to stabilize risk appetite on a sustained basis and anchor volatility, better global growth is needed, right? But we're not going to have better global growth. That's the problem, right? In conclusion, it writes, in short, the wall of worry is about to get a whole lot higher. How much longer can algorithms, keep climbing it? Calming it is the word that they should have used, not climbing. Spell check works, but it doesn't help with context. Yeah. How much longer can the algos keep calming the situation? That's where we're in, and we've been in since the end of 2018. My prediction was the end of 2018, we would see economic collapse, and by golly, it happened. They forestalled it. They're calming the market. They're not helping the market. They're not fixing anything, but they're keeping it calm. And that is the whole point of Trump and Xi and talking about the Chinese trade deal, the trade wars, as if that's our problem. That is a symptom of the greater problem. The greater problem is the economy. It is smashed. It is broke. Nations are debt. Corporations are debt. Individuals are debt-ridden. We're all debt-ridden. So even if the trade war is fixed, it doesn't help the big picture because everyone's broke. Period. Period. The system is broke. So how much longer can the algorithms, the computer trading systems, keep the system calm? It's a big question. Corporations are already seeing these slowdowns that they don't want to release to Wall Street and get everyone nervous, but they're behind the scenes making their cuts, enacting preemptive disaster controls, which is good, I guess. It'd be rather to see the company go down in size than out of business completely. I understand that. At the same time, they're making sure their stock valuations are high and they're taking their big fat salaries. Okay, we're going to finish up this video with last article. Paul Singer warns a 40% market crash is coming. Who's Paul Singer? He's a certifiable smart guy. Earlier today, in a stark reversal from his traditional cheerful demeanor, a Goldman Sachs strategist, Paul Singer, warned that, quote, purely based on elevated equity valuations as measured by the S&P, Shiller PE, which is profit and earnings, and current growth, which isn't existent, according to our U.S. Current Activity Indicator, the CAI, the risk of an equity drawdown of more than 10%, right, is the highest since the global financial crash. I think they call that the GFC. They don't, right? So Paul Singer is saying, hey, everything looks like shit, in other words. It looks like shit. Equity drawdown means stock market reduction in value. They use these fancy words to keep us, as the last story pointed out, calm. They want us calm. Okay. So again, take a look at these articles. Here we go. Well, Goldman wasn't the only one to see a major market sell-off in the coming months. Speaking at the Aspen Ideas Festival, I have no idea what that is, billionaire investor and Elliott Management founder Paul Singer warned that the global economy is heading towards a significant market downturn. Well, I guess Paul Singer doesn't work for Goldman Sachs. Sorry about that. Retracted, corrected, fixed. Let's move on. Okay. Quote, global debt is an all-time high. Derivatives are at an all-time high. And it took all the monetary easing to get to where we are today, and I don't think central bankers or policymakers or academics are in any better shape to predict the next downturn, and I think we are at the high end of the risk spectrum. In other words, we are screwed. And he then ominously added, quote, I'm expecting the possibility of a significant market downturn. Now, what's fascinating to me, and this is a great article to read. This one is a good article, has a lot of information. He is saying everything we say, everything we hear others talking about, that everything is in rough condition and it's coming down. They're saying it quietly while they keep stock market people, standard investor, Joe American, calm. People on the street calm. Your bank in your neighborhood calm. Your little small business is calm. Meanwhile, the bankers know what's coming. The government knows it's coming. They're playing games by pumping QE cash, super secret plunge protection cash, into the market, while corporations are slowly getting ready for the shitstorm that's coming, and they're hoping they can weather the storm. Government is getting ready. They're buying gold. Banks are buying gold. Everyone is getting ready for the next downturn. They see it coming, they're stalling it, and they're getting ready. In other words, corporations are preppers. And the bigger corporation, the more prepping they're doing. They're getting ready ahead of time, just like me and you with food, water, shelter, clothing, medicine, means of self-defense. And trust me, corporations have a means of self-defense. Yes, they do. You think they're going to let their assets get destroyed if they can help it? Still, right? Here we are, right now. They are prepping. We've talked about banks and what they do. We've talked about the government and what it does. What's the government doing? It's finding out who its enemies are, who its allies are, who it can count on, who it needs to brush off. You know, they're going to protect themselves, which is what governments do best. This is where we're at. Snapshot of the day. Everyone is prepping. Aren't you glad that you're a prepper? Thank you again for supporting the Prepared Mind channel. I'm going to continue to do what I do because I love doing this. And there is a lot of information to sift through and to compile it, collate it, fashion it, sift through it, and get information that's valuable to us as preppers to understand what is coming. Right? It's not just us. We're not the fucking crazy ones anymore, folks. They see it. They know it. Corporations, banks, and governments are all getting ready for what's coming. Aren't you glad you're a prepper? You know, chance favors the prepared mind. Is yours? Right? It is. If you're here at this channel, your mind is getting prepared. So, Godspeed to you, Semper Fi, and I'll talk to you again real soon. Bye-bye.